Hello, math and Bitcoin geeks. Welcome back, or welcome to Bitcoin Math. So today we're going to cover the Bitcoin versus dividends calculator. To get to that model, you want to be on the home page, scroll down to the calculators, expand lifestyle and wealth building, Bitcoin dividends versus Bitcoin here. Give that a click. So what this calculator looks at is really through a somewhat narrow lens in the investment world of not just equities, but really dividend producing equities and investments, things like MSTY, TSLY, and some of these other products from companies like YieldMax and really any others that produce a dividend. Okay. Now, the popular conversation topics around this lately have really been with MSTY because of the unprecedented amount of yield that it has been producing using the different strategies that they're using with MSTR stock and covered calls and things of that nature to produce these really outsized dividends. Which, have created a lot of buzz. But so instead of just hypothetically talking about, well, what's a better strategy or what would perform better if type of narrative and rhetoric, well, what if we just use some math and we looked at a few different scenarios? And that's what this calculator aims to do. So what we're going to look at is really 4 different outputs based on a couple basic inputs. So the first output we're going to see is a standard investment into a dividend producing product, right? So you take your dollars, you invest them into MSTY, and you accumulate the yield. But what you don't do is anything else with that yield. That yield accumulates as dollars. Perhaps you put that into a checking account or a savings account or whatever, but ultimately you're not reinvesting those funds. So we'll look at that as scenario 1. Scenario 2, very popular, is this idea of a drip investment, right? We're going to take those dividends that we're earning each month or each year, whatever it might be, we're going to reinvest those into more of the underlying asset. So if we use MSTY as the example, we would basically take our dividends every month and we would use those to acquire more MSTY. The next one's going to be Bitcoin HODL. What if we just took our starting investment amount, and instead of buying MSTY, what if we just bought Bitcoin and held it for the specified term? Okay. And then fourth and final is Bitcoin drip. So what if we took and we bought MSTY with our cash, but instead of dripping those dividends back into more MSTY, we use those dividends to drip into Bitcoin HODL? Okay, so in that scenario, what we're going to be saying is, well, we want to buy the MSTY, but we're going to take all of our dividends and buy Bitcoin and hold it in cold storage. Okay, and this is all going to be shown to us over a 5-year term. A couple of assumptions here. The decay is calculated exponentially by month. And if that doesn't mean anything to you, you can look it up, but it does have some minor impact on how the calculations are done and the results that are produced. And then the average dividend, so the dividend averages over the entire 5-year term are going to be large in the drip scenario, just because, again, it's taking an average over the entire term and not just looking at the average of, say, any given month. Okay? So what's the purchased amount? We've got, let's just say we have $100,000 and we want to buy MSTY. Let's say we're buying MSTY at $21 per share. Now, the fun part, the dividend percentage and the decay percentage. What is the annual dividend percentage? For MSTY, let's say we think over the course of this 5-year term, it's going to be 70%. And let's say we think the annual decay is going to be 20%. Okay? Now, these numbers can change. Again, this is just hypothetical, but you can plug in whatever numbers make sense. This is all going to be done over a 5-year term and is using the current Bitcoin price of $117,666. So the final piece here, we have to set the Bitcoin CAGR. For a 5-year term, I like Saylor's bull case, 37%. So let's go ahead and set the CAGR there and see the outputs. So the first thing you'll notice here is the bar chart for these three scenarios. You've got standard in purple, you've got drip in this red color, you've got Bitcoin HODL in orange, and you've got Bitcoin drip in green. So based on just the chart data alone, it looks like the drip scenario is going to produce the best results based on our inputs. And if we come down here to the data, we'll just kind of go through it section by section here, right? The starting value is going to be the same across all 4 strategies because we started with the same amount of money. And in 3 of these 4 strategies, the starting number of units is going to be the same, right? We bought 4,761 shares of MSTY at $21 each. In the Bitcoin HODL scenario, we were able to acquire 0.85 Bitcoin at a Bitcoin spot price of 117,666. So if we come down here to dividends now, your average monthly dividend in the standard scenario is about $3,500. Same with the Bitcoin drip, because again, your average monthly dividend is not being used to acquire more of the underlying MSTY. You're injecting that back into Bitcoin. But if we look at the drip scenario, look at our average monthly dividend, it's over 22 grand. Why is that? Well, because we took all of our dividends and we bought more MSTY. And so if you go down to the next section, what you'll end up seeing here is, well, how many additional shares did I accumulate? Well, in the MSTY scenario, you injected all your dividends and acquired almost 140,000 additional shares. Now, this is happening in part because, well, the price of the MSTY is going down, right, because of the decay. Therefore, at the end, you're stacking quite a bit of additional MSTY. And then over in the Bitcoin HODL scenario, you'll see that you were able to accumulate just over 1 Bitcoin using the drip strategy of reinvesting your MSTY dividends into Bitcoin. So at the end of this 5-year term, because of the decay, our MSTY is worth under $7, right? Whereas in the Bitcoin HODL strategy, our spot Bitcoin is worth 568 in both scenarios. And then lastly, at the very end, okay, what was the total amount of dividends that we received and held in cash? Standard scenario, it's over just about 213 grand. Our actual MSTY is worth a little over 30, so our total position is worth 245. Now in the drip scenario, we don't actually have any dividends because, well, we reinvested all of them into more MSTY, but we accumulated so much that our ending equity value of all of our MSTY shares is just under $1 million. Okay? Now in the Bitcoin HODL scenario, we've only got 0.85 Bitcoin. That's what we started with, and that's worth 482 grand. Come over here, we've got 1.05 Bitcoin because we did a little bit of additional stacking with our drip strategy. Combine that with the starting equity value from our MSTY, and we've got a total position of about $631,000. Okay? Now, this is a very, very easy chart to move based on the inputs, right? So if your annual divvy is only 50%, well, this changes dramatically in short order, right? And if I'm getting 50 on my Bitcoin CAGR, again, changes in short order. Now, let's say I'm actually getting 90 on my MSTY. Oops, I did 9. If I'm getting 90 on my MSTY, right, that's going to crush everything else. But when you start to shrink the spread here between the decay and the dividend, that's when things can change. Right? If my decay is actually double, what does this look like? Well, all of a sudden it's a very, very tight race, right? And so all of these different variables are going to dramatically change the results here over a 5-year period. And that's why this is such a fun, interesting topic of discussion, is because, well, everybody has different ideas about what these numbers are going to be over time, right? All the MSTY bros are convinced that the covered call strategy is bulletproof and going to continue producing 90% dividends forever. And there's a lot of people that don't believe that, right? They look at the yield max dividend performance of similar products over time, and they notice that there's a trend of pretty significant decay over time. So again, nobody really knows exactly what will happen, and we are just kind of modeling these things hypothetically here. But I encourage anybody to come in here and, you know, model whatever they would like. Maybe you've got a product that's getting you a divvy of 10 and the decay is only 2, right? Maybe there's a really, really minimal amount of decay that comes along with a more conservative dividend. And hey, if you think Bitcoin's not going to do great over the next however many years, well, then, you know, this more conservative strategy might be justifiable. But if you're somebody who's chasing higher yields and willing to accept that that might come with higher decays, and you are a Bitcoin bull, then oftentimes what you're going to find in this scenario is that just hodling Bitcoin can outperform some of these other strategies, right? Or if you're somebody who thinks that the decay on something like this might not be that significant, well, then, you know, maybe a drip strategy into more of the underlying equity itself makes more sense. So I encourage you to come here and play around with this and just model different scenarios. I mean, with MSTY as the example, nobody truly knows, but the way we built this model and the way we've constructed these formulas to work is to really let you look at any of these scenarios using the different inputs and the different assumptions that you want to use, and just see how the math works out. And if you do want to dig into the math, we do have an FAQ document here. You can come to the calculators and say dividends versus Bitcoin, and you can geek out on some of the math and some of the formulas and some of the things that are happening under the hood. It's not overly complex. It's not overly complicated math at the end of the day. It's Google Sheets, and it's some of the different functions and mathematics and formulas that are happening therein. But feel free to geek out on that if you want to learn more and get into the weeds. Always open to feedback. If you think this model is terrible, or you have feedback or suggestions or questions and want to learn more, do please reach out. We'd love to hear from you. So thanks for your support. With that, we will see you on the next one.